Good afternoon, everyone, and welcome to today's live market analysis on the 1st of March 2016. I'm Jitan, and it's a pleasure to be here once again. So, interesting markets, a lot of volatility, a lot of activity, been fantastic, a lot of pips and points all around the place. But for a lot of people as well, it's also been a bit of a headache as a lot of people tend to forget about market positioning. And I just want to highlight a few things over the course of this short webinar in terms of why it's so important to understand how other people are positioned in the market and really what drives the market. But first of all, let's have a look at the most important news announcements that have taken place over the past few days. And the first one is this, so the RBA, Reserve Bank of Australia, their announcement, they decided not to change interest rates, which immediately sent Aussie higher. That was quite significant, of course, because most people are very, very bearish on emerging markets and commodity markets based on all the volatility that has happened and the US Federal Reserve rate hike. So they've calmed the waters, as it were. And I think now Aussie and Kiwi will be more susceptible to what's happening in the other pairs. So, for example, Euro Oz or Pound Oz or things like that. We've seen the same thing happen in the British pound today as the market rallied on negative news. Wasn't necessarily to do with the news announcement, but it was more to do with the fact of the flows from Euro pounds based on euro selling off because of Brexit. And again, something we'll look at the charts in a few moments. And whilst I'm on the Brexit point, we have to think about the Brexit impact. Before, we've had a massive sell-off in British pound. It's been plummeting for the past few months based on Brexit as well. But now it's also dangerous for the Eurozone if such a major economy decides to leave the EU. So now's the chance for the Euro to sell off, and that's what we've been experiencing. Based on Brexit as well, it's compounded the chance of potentially more quantitative easing from Draghi and co, which has sent the DAX rallying, and other stock indices around the globe, actually. So we've seen some interesting correlations. I think today's negative manufacturing news on pound, which rallied, was more to do with the flows of euro pounds being short, and a lot of people probably banking some profits as well on their pound short positions. And again, we're going to get a lot more volatility happening over the next few months in the run up to the referendum in June. And markets have been, especially some of the cross rates, have been quite choppy, even though they're in trends, but we've seen big hourly up bars followed by big down hourly bars, and sometimes it's a bit more difficult to trade when you're an intraday trader, but you've just got to understand about the volatility and best places to put your stop losses and things like that. But really, what has been the best focus has been something that we've been talking about for a very long time, which is the seasonal theme of the commodity rally. So oil, for example, and gold have been fantastic. Aussie has been rallying as well, but right now it's more range-based than anything due to most people profit taking. But we've seen most action in oil and dollar CAD for obvious reasons. The inverse relationship that dollar CAD has to crude oil and also gold. So let's have a look at the charts and let's have a look at some of the levels that we could be trading off and some trade setups that have been happening over the past few weeks. So we have a chart, and I'm just going to start off with a chart of gold, actually, and you'll see that we kind of went sideways for a very long time, and this obviously is some type of basing opportunity, and we had the break of this high, came down to retest, and there's your trade. And the easiest trade is done, obviously. Now we've gone some big figures to the upside, and now we're just consolidating in this symmetrical triangle formation. So that has been fantastic to trade from an intraday basis, as you buy the lows of the trend line and sell the highs of the trend line, and really you just have to keep trading that until it breaks. Of course, Most technical analysts will suggest you trade this in the break of the direction. So you're looking for a break to the upside and really a test of this previous high here. But we also got to think about the correlations between equity indices are rallying, which is good in terms of risk on. So it's not that much need for gold as a safe haven, and also we do come into a seasonally bearish period for metals such as gold and silver, but you've got to think about how the market is positioned. Most people are long off this, so even if the commercials want to get short, or if the institutions want to get short, they're going to have to run some stops. So I potentially, I believe this is going to break higher, if not to just fade that rally as it comes into this high, maybe just a little bit higher. Okay, so I've been building up long positions on gold, just on this moving average here, in anticipation of a break. So we'll see if that comes to fruition. And again, it's just about trading in between the ranges, but also picking the right market. That's very important. That's actually half the battle. You can have the best technical trading setup there is, the best strategy there is, but you've got to understand the best market that strategy works in. And too often people are picking the wrong markets and trying to force a good strategy on a bad market. Again, it really depends on your approach, but picking the right market will do wonders for your trading P&L. So let's have a look at euro against the US dollar. And again, we've had to sell off based on Brexit, and we have put in a key bearish engulfing bar just at that resistance level there. So it does suggest we've got further downside to come. Again, I'll be looking to sell any rallies here based on this price action. Overall, though, it is going sideways, so it's not the easiest thing to trade. I'm sure there's a lot of people picking out directions left, right, and center. The euro will be at 1.5 by month end, or euro will be at 1.05 by month end. And again, I don't really have a forecast like that. I don't know the future. Right now, euro is probably more susceptible to the downside based on Brexit and things like that, and more QE. But it's not the chart to be trading right now. From an end of day perspective, from an intraday, beautiful. We're below the EMAs, and we've had some great short setups on it. But there are better currencies out there to be trading that are a little bit more obvious, where seasonal fundamentals and technicals are lining up. So in terms of euro, I'll be looking from an intraday perspective to add to short positions. From an end of day perspective, I would want to see a little bit more before I position myself for a medium term trade. Right. The benefit with intraday positions is that we're just trading in and out. Okay, so the overall market direction doesn't matter. We're just looking for the momentum. In terms of British pound. So a British pound, this one's against the USD. Okay, we had a rally. I mean, this rally is purely based on euro pound flows, also maybe some month end positioning that may be held overnight from yesterday. But nonetheless, you'll be looking to, the play here will be looking to sell into any type of rally. So, first selling opportunity will be this previous high here. So I'm sure there's going to be some stops. I would just watch this on an intraday level, purely because it would be a great area to look for sell opportunities, but if there's a lot of stops there, we may just get them to be run a little bit until it maybe hits the next level of resistance, which is here around one spot, 41.45. So that would be another area to add to potential short positions. Again, we could just end up with the fact that the whole Brexit scenario is actually much better for the UK and for the British pound than it is for the euro, and this could see a huge rally higher, but we have to let price action dictate that. If I start seeing chances of that, I'll be looking to add to some long positions as a contrarian on the contrarian account. But for right now, we've got to follow the trend. Right now, the momentum is down. We're looking for the best places to sell it, which is this high and this resistance level. Again, let's wait for price action at those levels to get the best possible timing and the best possible reward to risk on those trades. Looking at Aussie dollar. So Aussie dollar against the US dollar, we had the RBA announcement. We had a great rally here, and this is what I was talking about, front running a potentially bullish third quarter for commodities. And yeah, it started here with this price action based setup, and we've just run in obviously some triple top resistance here. It does look like from a technical basis that we've got a little bit of further downside to come. The jury's out on whether it will come down and take out that low. I think this is just going to be more susceptible to what the cross flows of euro and the British pound, but nonetheless worthwhile watching in anticipation for some further downside. I haven't positioned myself accordingly just yet, but this bearish engulfing bar that has set up, and you can see we've just retraced, taken out this high, and it's faded, is suggesting at least some temporary further downside. So I'll be looking at that over the next coming days for some intraday shorts. Some end of day traders may look to take this 50% retracement of this engulfing bar as a short position, simply enter here with a stop above here, so risk is defined. And the next level of support is really kicking down there. So you could probably squeeze maybe just a 1-to-1, 1.5-to-1 trade out of that before you can move your stop to break even level, and potentially hopefully let the rest run in anticipation of a further downside. And the great thing about timing the markets effectively is the fact that if you can get a good risk-based position where it's defined, then reward to risk works in your favor. It doesn't have to move as much for you to move to a break even, and then you're in a great position where you can let the trade run. And if it does run, fantastic. If it doesn't, you've protected yourself either at a break even level or for a small gain. Okay. So from a temporary point of view, looking for some further weakness here, but would really want to watch the headlines on that. Kiwi, an interesting one because it did, but it did get was a good fill that gap. You don't really often see gaps. Typically they would want to get filled, back down, filled the gap and continued in its direction. So you'll see here that the market filled the gap and is selling off a little bit. So again, we may just get some further weakness here up until this potential support level. So really what we're seeing is a potential bearish scenario for Aussie, Kiwi, Euro, Pound, which really means that the best place to put your money is the US dollar. We'll see more gains in the US dollar than anything else. It's just a matter of how you want to pair that. Okay, so US dollar against the Swiss franc, for most people, probably would have been the obvious choice. But again, it's against the Swiss franc. Possible talk of S&B intervention again. Not many people will be active in the Swiss franc right now, but nonetheless, we did have the bullish engulfing bar set up here. May just want to come down, take out this high test low in order to take the stops out and continue going higher. One worthwhile watching. However, I think the main focus should be on US dollar against the Japanese yen. Typically, March and April are the best performing months for the US dollar against the Japanese yen. So from a seasonal basis, it looks very good. From a technical basis, we've double bottomed, higher low. First opportunity sellers had here on this train track reversal here, two similar sized bars. You can see that the sellers took out the low, but the buyers trapped them and came back higher. If this does end like this this evening, I personally would probably be looking for a long position in anticipation for a seasonal move higher, at least up until a 115 level or handle. If not, maybe the 116 resistance level with these two previous lows. If we look at the bigger picture of where we are in context, you can see from the weekly chart that, obviously we've got 1, 2, 3, 4. We've done a 5-wave move lower, so probably are due for some type of retracement. On the weekly chart, I've also set up a bullish pattern here, but we do have significant resistance in the way. This 116 level represents some strong resistance. We've got 1, 2, 3, 4 weekly lows at that level. So more than likely the market would want to go and test that level, and I'll be looking for a long position in anticipation of it reaching that level. And once it reaches that level, well, of course, we have to let price action dictate whether we take a break from that level or a bounce and a continuance of the move downwards here. But right now, it looks like the momentum is potentially towards the upside. Again, I'll be looking to define my risk in case I'm wrong. But also the reward to risk seems to be quite positive here, with a 200 pip move in the yen. Okay, so dollar yen definitely on the radar. Well, dollar CAD. So dollar CAD has been interesting in terms of oil has put a potential base in, which meant dollar CAD sales. I know a lot of people whose systems have gone haywire and have experienced massive drawdowns because whatever strategy you back tested or traded or coded up during this huge move higher was working fantastic until all those levels broke away, and now we're obviously to the downside. Most people have just given back all the gains they've made there. But again, this is why it's important to understand, just what's happening on the bigger picture, just so you know the best place to put your money from a technical perspective and from either an economic or fundamental sentiment perspective is probably a better word for it. You'll see here on dollar CAD, we are a little bit overextended and probably looking for a move up into the 1.3650 level, where the first level of resistance is. Potentially may want to do a bit more of a deeper pullback before moving lower and test some of these levels here. So we've got some strong levels of resistance at one spot, 34.30. So we haven't tested that level yet, but market will probably want to go and test that level at some point. So from an intraday perspective, clearly looking for short positions as we take out previous highs and approach previous levels of resistance. So those are the major and minor currency pairs, but on the backdrop of all of that has been solid gains within the equity indices. You'll see here with the DAX had some great trades on the DAX as we've come above the moving average and been finding support, also combined with the euro sell-off. So however you want to play this, the DAX has been great. Again, the FTSE as well, as it low tested off here. So a lot of people, myself, I took the short positions here and here twice, got hit, but then took the long position here on the low test and worked out okay. Now, why have I done that? Well, again, everyone was short. I went lower risk on these short trades because when everyone is trying to go short on the indices, and that the market is just probably going to do the opposite, right? It's too late to the boat to be short in a major way on equity indices. All those people who are short from the top and the middle are obviously going to want to profit take at some point. If we look at the Dow, you'll see here the classic patterns. We've had the big sell-off, boom, 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 boom. Most people have missed it. People think, okay, this is the opportunity to get in. They get in again, and people are still trying to go short, and you just get these continual rallies keep going higher. When everyone is short of the market, just be very, very careful. Where can the market go from there? Usually, if it's heavily one-sided, it will go the opposite way. In terms of where we are now, well, now is the most difficult. The easiest trade was, really the beginning of the year, the beginning of Feb or middle of Feb, came into this level here. Bounced off, came into that level, bounced off again. That was the easier trade. Right now it's a bit more difficult in terms of where is it going to go. I think we've got definitely room to move higher. But obviously, I think temporarily we'll probably want to retrace a little bit before we do that. I think at least we want to test or fill some of these gaps here, but also test this resistance level here. Right now, the momentum is to the upside from a shorter term basis. Well, a longer term basis, well, the jury is still out. I would hazard a guess that the market is still going to continue moving higher. Again, where am I going to put my money on that trade? I'll have to wait to see a bit more bullish price action. I'm already long on this anyway, from intraday perspective, just building up positions. But I'm not looking to add significant positions just yet as we're in the middle of all of this. So just really want to see in which way it breaks. March tends to be a very good month for equity indices. April tends to be a very good month for the FTSE, especially due to ISA season. But I think right now you just have to wait for the markets to retrace and give you that signal, and just go with the flow, go with the momentum. I think that's the most important word in this case. So with the equity indices rallying, really where do you put your money? I would say equity indices, the commodities. We see that some of the cross bears, let's say US dollar against the Swedish krona, probably not on everyone's list. It is going sideways, but this double bottom here was very technical and classic, and we put this high low smash bar in. The lows here got bought, so it's looking like there's strength in the US dollar, and I'll be looking to trade this to the upside. And you really have to kind of search for the best currencies to play the US dollar strength against. It has become a little bit difficult. Correlations have really kind of moved out of alignment. To be quite honest with you, you can see here dollar pairs are quite mixed. Even today, there's $2 pairs that are going up, the rest of them are going down. But it's where you pair them against. And some of the cross rates on the euro, for example, have again just been consolidating here. So Euro Oz was looking for an interesting potential break here. I haven't traded this personally. Trading breaks on a cross rate is sometimes can be quite difficult, but sometimes they can trend, like Euro CAD, because of CAD in terms of the oil prices. So that's been good from an intraday perspective. We're in a trend mode. We're not ranging like Euro Oz, for example. And again, this is just matching strength and weaknesses. We know oil has potentially based. Oil has been moving higher. We know US dollar against the Canadian dollar has been selling off. If you look at any of the Canadian currency pairs, CAD has been rallying. CAD against the Japanese yen, CAD Swiss, they've all been moving higher. Even today, you can see CAD yen has been moving higher. CAD Swiss also been moving higher. So Euro CAD would be a sensible one to look for shorting opportunities, selling Euro, which is weak, and buying CAD, which is relatively strong. So that has been really the best plays, to be honest with you. Pound Oz has been good. So most of you already know, on the previous webinars, we've been looking for a pound or short, and for those who are members of our trading floor, we sent out the signal here for pound Oz for a potential short position, as we just failed to really break through that resistance level, and just put in these two significant reversal bars, and just got the short position on there. However, we were short from way up here based on the seasonal analysis, and the fact that this price action here was very bearish. So that trade has kind of played out. Where's it going to go from here? Well, again, we looked at Aussie dollar earlier. It's a little bit range based right now, just looking for direction, but there's better currency pairs to be focusing on. Okay. In answer to the question I've just had here on the post, which are the 3 timeframes you have on the screen? So these timeframes I have here, the daily chart, 4-hour chart, and 1-hour chart, it just gives me a good approach and good market snapshot in terms of swing trading of the daily chart and intraday positioning. On my intraday charts, when I trade, I have a lot more moving averages and, you know, support resistance levels on there, no indicators, just pure price. I have a daily 4 hour, 1 hour, and a 10-minute chart. Sometimes a 3-minute chart as well, but that's mainly for indices, equity indices, futures, and stocks. Not so much for forex, unless we've got a very, very strong trends, which I may go down to 3-minute. But these charts here are just more of my snapshot charts in terms of me looking at the bigger overall macro picture. Okay. So in terms of a recap, let's have a look. Well, the market right now is on a risk on mode, so great for intraday traders. That may change next week, but right now Brexit is in focus. We had pound plummeting over the recent weeks and months. Today we saw the pound actually rally, but that's from the euro pound flow as euro turns negative. Perhaps it's the euro's turn to turn negative on Brexit fears. If the UK leaves the euro, that's clearly not good for the euro currency as well. So we're going to have this, euro selling off, pound selling off, taking it in turns as we run into the referendum on Brexit in June. But right now, there's more. There's better things to be trading that are more obvious, at least right now. So the commodity rally, so oil has been great, and March tends to be a great month for oil bulls, which could potentially mean dollar CAD down. Stock indices, this seems to be the best month for things like the DAX and the FTSE, S&P, Dow, NASDAQ. And again, how are they going to fund stock purchases? If you want to be long on indices, generally you'll probably use the euro to fund that. So could see more weakness in the euro as well. Again, watch out the headlines for Draghi and Co. with QE as well. Could compound those sales. Right now, how are my positions? I'm positioned long oil, long gold. Before I'm looking for a rally sell on gold in line with the seasonals. Short euro and pounds. Long dollar yen. Dollar yen tends to be a great month, March and April for the bulls, and long on indices. Again, I'm a bit I'm being more conservative where we are right now. Now, the easiest trade has been done. We're in the middle of things right now, so they could go either way. But nonetheless, you're gonna position yourself accordingly, right? You have to be in the game to get anything out of the game, or you got to risk money to make some money, right? So that's kind of where the snapshot is. Again, I'll be looking for key levels to be broken and to bounce off, and price action. For those of you who liked our Pound Dollars call, then visit us on our website and have a look at how you can access those for yourself as well, and get in touch. We've got a great team on board, a great community. And again, it's all about working together just to find that momentum and find those trades, and everyone can have a positive P&L, all right? So that's it from me, ladies and gentlemen. It's been fantastic having me here again. I appreciate it, and I look forward to seeing you next week. Take care.